Well, good morning. It's March 24th. Let's take a look at what's been happening in the broader alternatives market and at asset class this week. So some significant news from the institutional investor landscape, at least. CalPERS, which is the US's largest pension fund, about 483 billion in assets under management, has said that it's increasing significantly its allocation to alternatives. So from about 33% of its portfolio to about 40%. So really significant vote of confidence in the alternatives market there. This comes after 2 years ago they announced that they were cutting back their allocation to private equity in particular, and discovered that that has cost them about 18 billion in returns. So quite a 180 being done there. But yeah, great news for the alternative sector to see that money coming into it. So we'll see how that story develops. And elsewhere in the alternatives industry, some interesting news out of KKR. Produced a survey recently from 75 of their family offices around the world. 52% of their portfolio being invested in alternatives. That's the family office space. Really significant increase here in the past year. Cash, interestingly, fell from 11 to 9%, and publicly traded stocks from 32 to 29%. So that's, I guess, the benefit of patient capital. The favorites, according to the report of the family office sector in the alternatives space, were private credit, which is about 45% of where they expected the allocations to increase. Infrastructure at 31% and private equity at 28%. So again, further good news and perhaps signs that the market is rebounding significantly. So again, great news for the private equity sector. I guess the other great thing to see this week was the IPO sector coming back into its own. It is still early signs, but the Reddit IPO, which was announced on Thursday, or rather came to market on Thursday, stock rallying about 48% on the opening day. That was a great sign. And hopefully the sign of things to come. So venture capital getting its day in the sun as well. And yeah, it's interesting to see across the sectors, institutional, private equity, venture capital, all rebounding strongly. So again, we're watching these trends month over month. I guess this is probably the third, fourth month that I've talked about those early signs of recovery. So long may it continue. And from an asset class perspective, this past week, I recorded the latest episode of The People of Private Capital. This episode was with JB Tanqueray. JB is the CEO of Dorian. Dorian is a company that's focused on, as I mentioned in a couple of the prior vlogs, focused on helping non-EU funds enter the EU. They provide a service to help you navigate all of the regulatory challenges that come with entering the European and broader EU market. Great interview with JB. Talked about his entrepreneurial background, his time as the CIO of various family offices, both multifamily and single family offices. So that was some great insights from him. We also recorded a couple of webinars with him, and they'll be available on our website. If you go to assetclass.com, click on the media tab, you'll see they'll be available here in the coming days. I'll put out a further post on LinkedIn here just to advise people of that. But yeah, great couple of webinars and a great episode. So check it out wherever you get your podcasts. I'll put a link in the notes below as well. And so that's it for another week. We're coming into the final week here of Q1. Hope you have had a great Q1. It's certainly been a very active Q1 for us. We're looking forward to seeing how Q2 develops as well. It's a very promising start to the year. But wherever you are, whatever you're doing, hope you have a great week, and we will talk to you soon. Take care.